Welcome back to Morning Trade Live. It's time for the chart master. Jenny Horne is back with us to take us through the fundamentals, and Rick Ducat joins us to go through the technicals. Jenny and Rick, thanks for being here. All right, Jenny, we're talking three names, all losers today, all losers this year, the past 1 year, and trading much closer to the lows than the highs. But let's start with Marvell, off about 1.3% today, and an analyst is scaling back its price target. Fill us in.
So this is one of the two names that is pulling back from at least all-time highs. So the target is well off of its all-time highs. We're years away from that. But when it comes to Marvell, just comparatively, we've pulled back from its all-time high of around 127.48 a share. I will note, though, that this is one of the, it's still up on the week. So we're up 4.5% on a week-to-date basis. Citi, though, reducing its price target to $96 a share from $122. With a buy rating, however, they reduced their estimates to reflect this macro uncertainty, cutting hyperscalers' capex by 5% in both 2025 and 2026, which reflects mostly Microsoft capex cut concerns, plus uncertainty around the global economy due to these ongoing tariff disputes. That said, the bad news, they believe, is largely priced in at these levels, and they also do believe that there's still a buying opportunity for Marvell. So all that should be said, I think don't let the headline of this name getting a price cut let you believe that this was as downbeat as perhaps it was. Keeping a buy rating says you're still an optimist in this name, which is not, hugely the belief with so many of these tech names. I also think that with capex concerns of companies trimming back, I think that the tone I've read is that we're just not going to see the continuous acceleration of capex from big tech, and that we're actually going to see the promises already made still remain intact. Obviously, that's just one prediction, but I will be curious to know what capex looks like this earnings quarter, because if we do see major names like Microsoft pulling back on capex, significantly, that will be a problem. But accelerating capex, yes, I think that at this point seems a bit improbable.
Yeah, I was just taking a look. 39 analysts cover the name. All but 3 have a buy rating. So a lot of bullishness on the street. And Rick, I guess according to this analyst, the good news is, all the bad news is priced in. But the bad news is it's 59% off the highs. So when you take a look at this chart, what stands out aside from the sharp sell-off we've seen this year?
Caroline, there's always room to price in more bad news. Just keep that in mind, I guess. Just kind of tongue-in-cheek, but really, it's been very unpredictable across the board lately here. But what we are seeing with this particular chart is that we had this low point here all the way back August 5th, a key date for many stocks in terms of establishing lows. We did break a bit below that point there. We hit a new 52-week lows just above 45, 46 around that level. But 53 or so was that low point. That's about where we have held on so far. But for now, it's looking like we had a false breakout above this downward sloping trend line here in white. We haven't really been able to recover yet. So it's kind of a dicey situation here as we head into the conclusion of what's been a very historic week for stocks here. Notice as well that RSI kind of showed a similar false breakout. It showed we had this very mildly sloping downward red trend line here. We peaked above it at the same time price did, but we have retreated back below it. Now we can see that in addition to price being below all of our 3 moving averages that we follow there, we are also below our -2 standard deviation channel. So this could be a resistance area to watch, 59 or so. Then we have our volume profile point of control, our area of heavy trading that matches up with this range bound area as well as the prior activity there. So around 69 or so would be the area to look for there. And just a little bit more to the downside here, you can see we have our -3 standard deviation channel currently coming in near about 40.60. So that could be a further supportive area.
Okay. All right. Jenny, switching to retail, I have to say, I knew Target was under pressure this year. I didn't quite realize how much. I guess we've had so many retailers to focus on. Target share is down about 3.4% right now, only about 2.4% away from the 52-week lows. And Mizuho is out with an initiation. What are they saying about Target at these levels?
I have to say that this note actually was a bit more optimistic than perhaps I might have been. They started Target with a neutral rating and a $92 price target, believing that they've lost some of their competitive edge lately, which, yes, I think the chart illustrates that pretty well. But right now, their comparable sales have deteriorated, shrink also continues to compress their margins. Management, they said, is still finding their way through this multi-year profit recovery with stable and rebounding comp sales growth being the missing ingredient per this analyst. So a reminder that this name traded as high as $2.68 a share, $2.69 a share if you round to the nearest dollar. But I think that the story for Target has been, it's almost like a not to compare because they're very different stories, but Boeing in the sense of like it's been a multi-year story of just pessimism. I mean, first we had this company that was crushed the pandemic as far as its supply chain, its management, its distribution. And ever since then, like it's had major misstep with its private labels. It's also really skewed towards more of its high margin goods, which have not been resonating as well with consumers as inflation has weighed on consumers. And then more recently, we also saw it roll back its DEI measures, which many are predicting lost the company, I mean, billions of dollars in market value, as so many did avoid going to Target over the past quarter as a result of some of their measures. So I think that this is just the tariff narrative is just the latest string of, unfortunately, not positive sentiment that has weighed on Target shares for years now at this point.
Yeah, I have to say I spend a lot of money at Target, but I've switched to that same day delivery service where someone else shops for you, and it costs more money, but ultimately it probably saves me because I don't add anything else into the cart that I absolutely don't need that's not on the shopping list. So maybe they're losing money on me. Rick, when you walk through the technicals or take a look at the chart for Target, what stands out?
It's a difficult one for anyone who is bullish in this name. Unfortunately, exhibiting this kind of stair-step type price activity that we see oftentimes in stocks where we have a trending period, a period of consolidation, a jump to the downside, another period of consolidation, and then we're still within this rather lengthy move downward here, carving out new lows pretty much day by day so far. For now, 87.35 is that downward boundary in the shorter term. We can see, though, that there was a little bit of bullish divergence on the RSI here, despite crossing into the oversold area for a second time. The RSI did not make a lower low, even as price did. So that's perhaps sometimes viewed as a sign that there is momentum building up in a name. I would be rather cautious, I think, for this one, given the overall situation right now here. We are still below our moving averages. Yellow 21-day is the closest one here, coming in at about 101, and then our gap would be filled once we get back to about 104. And to look at our other studies here as well, we can see that this area right here, pretty close to our trend line and our 21-day EMA. We've also got a significant volume node near about 104, 105, and also our -1 standard deviation channel just right on top of our moving average. So that's a key area to overtake to the upside. If we were to move a little bit lower, perhaps support could be found at our -2 channel near about 83.23. But for a longer term look, normally I do 5-year charts. I had to do a 10-year chart for Target here because we are at the lowest level that we've been in since all the way back here in 2019. So a difficult situation to be sure. Long-term volume profile comes in around 72.
Okay. All right. Jenny, finally, a big price target cut on Deckers Outdoor, maker of Uggs, which I brought back into my life last year. Hoka, I believe you, at least at one point, wore, and Tevas, which I haven't brought those back yet from middle school, but got a huge price target cut. Fill us in.
Yeah, so Hokas are my shoe of choice. So this is especially painful, but actually this is, to me, and I'm not going to steal Rick's thunder here, but this is the most interesting chart. If you look at, I was looking at a longer term weekly chart. We've been down now for 10 consecutive weeks outside of last week. And I mean, like the stark fall from its all-time high has been so vast. And you can see that really with these significant weekly red candles we've seen now over and over again, where this company has really fallen to. And the overall enthusiasm has also completely waned. Piper Sandler, like you said, pretty significant price target reduction to $100 a share from $210, which really matches that move we saw. Highs we saw in this name were, I mean, considerably above, obviously, obviously where we currently saw the high was around 223.98 a share. So now looking at levels closer to this target, which I think this is just accommodating some of that recent pressure. They did say that they highlighted the 145% tariffs on China, 10% from other countries. On their average coverage right now for 2025 as well as 2026, they're trimming their overall earnings estimates by about 14% as we flow through 25% of all cost pressures on the various profit and losses. They also adjusted right now a lot of their coverage to reflect a potential recession scenario that they believe would pressure demand. And the story with Deckers, I think, was easily seen why we saw this massive repricing is because they have major manufacturers in China as well as exposure to Vietnam. Both countries, I mean, especially regarding to China, was the concern that is not going to be a narrative that's resolved anytime soon. And so many of these footwear producers do have so much exposure overseas that some other names like Nike, Lululemon, On were also hit, I mean, relatively as hard. So it's not just been a Deckers story, but two manufacturers in China specifically that make the Hoka brand. So I'm sad if I have to pay more money for those shoes because, frankly, Caroline, I'm not going to not buy them. I mean, like, you have your brand you're loyal to, as I know you're an On enthusiast. I'm not going to stop buying that shoe, but I definitely don't want to pay more. So that definitely hurts as a consumer.
Yeah, I mean, I think that's the big concern about basically everything that we're buying at this point. Rick, I was taking a look. This analyst very much in the minority. It's the lowest price target on the street. If you take a look, about 70% of analysts still rate Deckers as a buy. Median price target $212.50, double where it is right now. So as you break down this chart, what levels stand out to you?
Well, to kind of speak to what Jenny was saying, here's our weekly chart showing this, 10 consecutive weeks slide here, 10 red candles, so a very difficult chart for sure. And just to kind of, give you a broad overview of before we start our more short-term discussion here. So now, if we were to look at some of our other charts here, we can see that we had this slide. It was a difficult situation that was catalyzed here by earnings. We missed earnings there and traveled lower here, establishing some new lows near 93.72. Once again, seeing a little bit of bullish divergence here, and we are seeing an upside breakout from this trend line. We have stalled out so far at our yellow 21-day EMA, but for now, price is holding above that old trend line. So kind of an interesting situation there. Perhaps, maybe Jenny's right. This is kind of, in some ways, the most compelling chart because what we look for so often is these breakout scenarios where we have a repeated level of resistance or support. Then when price does eventually push through, it triggers the cascade of orders and the runaway activity begins then. So the next place to look for something like that would be this kind of double top here near 126, this red line here. So if we can kind of continue this trend, that would be one area to keep an eye on. If we were to add our other studies as well, you can see that we have some volume nodes here that lines up with our 21-day EMA near like 115 or so, and here, which lines up with our -1 standard deviation channel near about 137 or so.
Okay, all right. Deckers Outdoor down about 2.5% today, but I was just taking a look at my retailer watch list. Every name in the red except for Dollar General and Walmart. So it's in some good company today. Rick and Jenny, thanks so much for the fundamentals and the charts.